Hi guys, Reynaldo here. Another choppy in the markets today, despite everything's all electronic trading since stock or New York Stock Exchange also closed due to the virus. Now, I'm going to show you here that it broke through last week's lows, especially Wednesday's low at 2273.3 right there. It was looking really good because no one was willing to go beyond those lows as explained on Friday's market update. However, there were a lot of selling pressure in the end. And here, once again, there's some form of agenda all the time that institutions always pretty much know ahead of time. And if I will go through a smaller time frame, you can see that based on the choppiness of the markets, notice it was stabilizing here. There was a big boost. And one of the major reasons is simply Congress, where lawmakers were working on coming to an agreement to a fiscal stimulus bill. So I believe they were wanting to create around $2 to $3 trillion based on what's the whole virus event that's currently happening basically here in the US and globally. However, the vote got blocked twice today, and they're still basically thinking. And when there's a lot of uncertainty, and this is where the market basically drops. And that's what basically happened. Breaking out, got excited, and then got rejected. Market is down 2.81%. So the question is, if it's going to be passed, then there's going to be some form of security. Then the odds and probability that the markets will finally revert back up to a form of a correction is highly probable. And if I look at the VIX, VIX was basically the same. Kind of actually right at this point in time, there is an anomaly, which is has a big divergence. There's the volatility index. Currently, it's pretty choppy. It was up at one point in time and it's currently down. So technically speaking, the VIX will be high up there, currently in a negative. So there's a divergence between there. So there's also a good sign, meaning that the fear indicator is dropping a little bit and some form of reversal will happen pretty shortly. Mind you though, part of disclaimer, this is just part of my forecast. So don't believe in what basically I say. Do your own homework. If you don't know what you're doing, please stay away from trading or investing in general, as it can be very risky. If you need to know more, please get in contact with us, and we're more than happy to help you out and to gain some more coaching or mentoring when it comes to some knowledge involved when it comes to investing or trading the marketplace. All right. So going back to what happened today based on the news, if we look at here based on the treasury yield, also actually down 14.91% right at this point in time. And technically, the dollar index should also be on a negative. It was down earlier based on what's happening based on the stimulus, and then got rejected, came back up, which affected simply, which also doesn't make sense because the euro is currently up. So there's two anomalies happening right there, right at this point in time, meaning that the euro is holding its price to where it's at, whilst the dollar is also heading to the upside. So technically, euro should be down right now, but it's not. Right. So, and if we look at oil, oil is currently down. So based on Texas oil, is down 0.87%. It's holding its price around the $21 mark around here. So the low of today is, to be exact, $20.58. Lowest is $20.27. Currently at $23.12. So it's holding its price. There's a probability that this is also going to reverse as a form of a correction pretty shortly. that being said, the dollar CAD has also an opportunity, and you can see through there, despite still very strong, there's also some probability that this is all going to fail to the downside. Okay, so that's what's currently happening based on news. So just to prove once again, news will always drive price based on supply and demand, based on emotions of fear and greed, especially with certainty and insecurities in the marketplace. When there's fear, hesitation happens, then buyers will be afraid. They're not going to create a demand. Supply will be basically come in. But when there's some form of security in the marketplace, then you'll see fit that buyers will decide to come back in and lessen in regards in terms of the supply component, and this is how price will go up. So this is also what's happening in the Dow, down 3.4%, 659 broke through last week's low right there at 18,897. So medium to longer term period, the Dow can easily drop down to 17,000. Major one's about 14,000 if the virus won't go away. If it's still got a lot of uncertainty, then this is going to keep tanking. So, but unless the government will do something, Congress will pass certain laws, then this is where we're going to see a change in hands from selling to buying. All right, guys, hope you enjoyed that. Please subscribe to our channel if you want to know more in regards to want to receive all these videos. And other than that, please, at the same time, we have our events. If you go to our website, we are offering free sessions in regards to strategizing your portfolio during these troubled times. And if we go through our events, or if you click in terms of to register right there, you can see this whole week, Monday to Friday, 11 o'clock Pacific Standard Time. Then we're doing this free informative workshop sessions on how you can strategize your own portfolio during these troubled times, especially the market's down more than 30%, and perhaps your portfolio is also down to that amount, about 30%. All right, guys, take care, be safe out there, and till next time, happy trading, guys. Take care.